Good evening, everyone. Welcome to our weekly session, DYOR Blockchain Academy. So, I'll be your host, Frank, and we want to talk about stablecoins today. So, that's what we want to talk about. And yeah, the latecomers will keep on interrupting us, but just bear with us. Let me join with my phone so that I don't interrupt the session when new people are joining. Anyway, back to the session. So we don't want this to be very long. So tonight's session will be talking about stable coins. I'm sure most of us have heard stable coins and stuff. So just from the word stable coin, it doesn't variate. There's no variation on prices, like it's a constant, like 1 to 1. That's just a rough explanation of what it is. And yeah, what they do is that they provide stability in the crypto market. And before we move to crypto stable coins, um, the most stable currency right now, let's take an example of the US dollar. It's the most commonly used and the most known worldwide. Now, we may view it as a stable currency now outside of the world of crypto. Now, if you come back to crypto stable coins, we can view them as the digital representation of something like the US dollar to our currency. So there are so many stable coins, and we will just look at some of the examples as we proceed. Yeah, and just like I was saying, they they're really crucial to facilitate our everyday transactions in the world of crypto. Like right now, what's going on is I think this is the last day. Me and Dalmas tried to apply for Gitcoin rounds. So what happens there? The whole crypto community in the world, uh, whoever has a project on whichever theme that is hosted there, can just uh, apply for the Gitcoin grants. Then you can donate to whichever project you feel like, as little as $1. So for stuff like that, you can take advantage of stable coins and donate to me. Let me say, for example, me, you can donate to DYOR, maybe just $1 of stable coin. So imagine if probably 54 people donated. That's like $54, which is good. Can help me or any other person who is doing some crypto education out there. But yeah, that's just an example of how it facilitates transactions. Just a second. Yeah, and this one will also enables crypto adoption, because there are so many skeptical people. If you tell him or her Bitcoin was once $69,000, but now it's suddenly $34,000. Now, if someone is that skeptical, he won't onboard crypto. However, if you try to explain to him, you don't have to like own Bitcoin. You can also own crypto stable coins, which don't are not affected by whatever is happening in the crypto market. Let me look professional kidogo. Yes. So what a stable coin? Don't mind about the scatter. It was just for aesthetics. And we have talked about what stablecoins are in the world of crypto. So they're basically designed to maintain stability or other stable value of the volatile market. And they their main use case, allow me to join with my phone so that we avoid these interruptions. Yeah, sorry about that. Now I'll be able to onboard people with my phone. So as I was saying, stables, they are designed mainly to uh, maintain stability in the ever volatile crypto market. And I give an example of trying to onboard someone in the world of crypto, and then you tell him Bitcoin was $69,000 in 2021, but right now it's $34,000. I mean $37,000. So if you tell someone like that, he'll kind of shy away because naturally, I guess humans are just greedy. So they always want to just go to something that is always positive. Also, but if you onboard someone that was in the bear market before, maybe he saw that Bitcoin was, I think, $2 in 2013, but right now it's $34,000. They'll gladly join. And if you have knowledge of stables, you'll really enjoy whether it's bull market or bear market. So there are so many kinds of mechanisms that are used to, let me use the term, create stable coins, and we'll look at some of them, like collateralization, algorithmic stable coins, or even combination of both of these uh, stables. And before we look at how this is done, we have types of stables. We have the fiat collateralized, the one I used the example of USD to back it. So what happens? They're backed by TradFi, traditional currencies. I don't know why they're called traditional, but yeah, because we are moving to a new frontier, so they are traditional. Like USD, if Kenya was powerful, not powerful, yeah, powerful economically, you would have case euro. Uh, there is also for GBP, the other stables who are backed by even euro and pounds, and but the most common is of course USD. Then uh, there are these ones that are collateralized based on other crypto, for instance, Bitcoin. So you get someone has like, well, not someone but an entity has stable coins, but whatever is backing it is their Bitcoin reserves. I'll use just an example. I'm not saying that's how they do it. For instance, let me use the first example, the fiat collateralized stables like USDT. It is backed by US dollar. So if you follow this bot on Twitter, on X, I think it's usually Well Alert and Watcher Guru or something like that. You will hear that a billion USDT minted at Tether Treasury. So what happens? A billion US dollars are converted to USDT. So they are completely wiped out of the physical circulation and they are minted onto the blockchain. So like that one is fiat collateralized. Then there's crypto collateralized. Maybe let's say I own a crypto company, DYOR exchange. So I'm a whale. I have like 100,000 BTC. So I create um, DYOR coins that are one equivalent to $1. But what really backs up these DYOR coins are my 1,000 bitcoins. So it's collateralized. It's even over collateralized with my Bitcoin. Then there is algorithmic, which these ones are a bit technical, and the smart contracts manage the supply and demand dynamics. The most common one was, I'm sure you had case with the Luna stablecoin. It was algorithmic, and at one point it depegged from the real value, and that's why it really plummeted. There are so many examples of algorithmic stablecoins, crypto collateralized and fiat collateralized, that we'll look at. I've already talked about fiat collateralized. So these are the examples of fiat collateralized. There is USDC. Tether is minted at Tether Treasury. USDC is minted by Circle. Just during our free time, you can just go to tweet X. That's why you remember when we started this cohort, this academy, I told you if you want to really learn about crypto, you have to have an X account, formerly Twitter. Elon is making us speak a lot. You have to say X and explain formerly Twitter. You have to have Discord. You have to have Telegram, and what else? Yeah, those are the main social media, and there are others that we don't know. You have to be friends with stuff like I guess YouTube, but YouTube, be careful because there are so many content creators there. Yeah, so True USD is also fiat collateralized, and the ratio, when you see 1 to 1, it means 1 True is equivalent to 1 USD. That's just about it. Then crypto collateralized, as I was iterating before, they use crypto to back their value. So over collateralization is what I was saying. Like you have so many Bitcoin that nothing will scare you. Like for instance, I'll still use DYOR because I don't want to mention other companies and maybe, I mean other protocols, and maybe I'll be spilling wrong information. So let's say DYOR, we have 100,000 Bitcoin in our reserves. So if you take one DYOR, it will be a very long name. Let's just call it USDD, US dollar DYOR, USDD. So if I have 100,000 Bitcoin and then I have USDD backed with my 100,000 Bitcoin, if for instance, Tassi probably, or Emmanuel wants to withdraw like $2 million USDD, you can see I still have 100,000 Bitcoin, which is almost, I think, something close to $3.4 billion. So it's over collateralized. There's no chance of there's no point that there will be some kind of supply and demand issues. However, if I just had 10 Bitcoin, but I have USDD in excess supply that the value is probably more than the 10 Bitcoin, then let me pick another upcoming whale. Bambi withdraws $2 million of USD, but I collateralized with Bitcoin that's worth probably $900,000. You can see already there is problems that will happen there. My DYOR exchange might collapse. Stuff will just start happening. Yeah. So the popular ones are DAI stablecoin and Synthetics USD, SUSD. Those are the popular collateralized crypto stablecoins. Now let's also talk about these ones. I find them really interesting, and I don't think I can even try. But they're not actually bad. So they rely on smart contracts. So the token supply and they actually rely on the token supply to stabilize the price. It's kind of like the crypto collateralized, except this one now runs on smart contracts. So so the smart contracts kind of adjusts the and stabilizes the price based on the supply and demand. So like I was giving an example, maybe someone wants to withdraw a lot of US ample forth or basis cash, and the the algorithm will sense this supply, and then it will balance it with demand somewhere else. Someone else who wants to sell with someone else who wants to buy. So the smart contract must be very well written so that it doesn't cause some kind of instability. Hence, you will find the algorithmic stablecoin collapsing, and then the price plummets. So if the smart contract isn't properly written, now for example the Luna stablecoin, so there's a time, I don't know what happened, why it depegged. So if you are keen, you could use even $10 to acquire so many tokens of the same coin that are supposed to be 1-to-1, because it plummeted, and then you wait for it to stabilize, and then you swap. So because there was that glitch in the smart contract, uh, the supply did not meet the demands, because there was just some kind of imbalance that some people over withdrew, while some people who are not keen suffered, because the crypto money is the same money that is circulating. So if you lose money, someone is gaining somewhere. So that's what happens sometimes with algorithmic stablecoins. So they have to be properly audited. If you're taking part in them, be keen on these stables. So I've talked about the types of stables. Now let's look at probably to yeah why stable coins, like what are the advantages of owning, or rather of taking using these stable coins. If you are hearing me when we started, the first one was actually to mitigate volatility in the market. So they offer price stability, making them useful for everyday transaction and store of value. So I'm just new to crypto. I've just entered the crypto space. Maybe I was lucky. I have 10 Bitcoin, but I don't want. So the 10 Bitcoin is 370,000 USD. I don't want so much pressure. So what do? I convert them to stables of $370,000. So I have my $370,000 very stable somewhere, and I store my value. However, if I'm not a degen is just a term in the crypto space. I'll share a podcast I did with someone explaining some of these jargon that we use, the lingo, degen, wagme, DYOR, NFA, all of them. I'll share it. Please listen to it. It's really interesting. Yeah, so if I'm not a degen, I just want some stable life, you can take advantage of stablecoin. And then the second one is liquidity in the crypto ecosystem. They offer so much liquidity. So like I was giving an example of the treasury maybe has minted like a billion USDT. So already there is liquidity there. People can take part in different kinds of DeFi DeFi, let me call them services like staking, borrowing, lending, etc. So if again I have my 10 Bitcoin, I convert it to probably 370 USDT. Now I offer liquidity somewhere to probably a DeFi protocol that will offer me maybe 5% if I become a liquidity provider. So you can see the stablecoin has enabled me to become a liquidity provider in the crypto ecosystem. Also, maybe there's a company who wants to onboard into crypto, they can just go to Tether treasury, mint some USDT and come back with liquidity in the ecosystem. Of course, right now someone can send you crypto easily from even Russia to Kenya using these stable coins. I think some of you here are probably writers or just some gig. Maybe you are what can I use an example of? Let me use an example of there's someone who usually he used to I think teach some people, yeah, on Discord again. That's why I'm telling you Discord is fascinating. So he just teaches them some mathematics and then they pay him using USDT. He's teaching someone probably in Spain and then the person is paying him in stables in his crypto wallet. So it's really efficient instead of waiting for these other remittance services that takes days. Sometimes you're banned, you don't know why you're banned. There's a lot of friction in cross-border transactions and payments. Then of course that one is what we'll be talking about, hedging against volatility. Again, there's someone who sold his Bitcoin at $69,000 during the last bull run. He or she hedged against, or them hedged against the volatility of the market. Maybe there is another person who sold at 52K because he saw Bitcoin dropping drastically, so he took advantage of stables to hedge against volatility. Yeah, so there are so many examples. If you have, you can add other examples, but those are the super main ones that stables offer. So the advantages, I guess, last minute. Yeah, the advantages of stables also are tied to the use cases of stables. For instance, the one that I mentioned, the remittance part, cross-border payments. You're probably you're a writer or you do homework for someone probably in Malawi. So after doing for him homework, yeah, I remember there's a day someone texted me, I do for him some, I think it was calculus. I don't know where I got my number. Then he paid me with stables USDT. So you can see it was very smooth and fast. Also, there are companies taking advantage of this. For instance, you can buy. There's a person who I think he deals with some. I don't know what he does, but he can easily sell his products and then get paid using stables. Then the biggest use case is on DeFi. I think I talked about it. Borrowing, yield farming, lending, all this is enabled by stable coins. For instance, if you want to be a lender, or if you want to provide liquidity, you provide 50-50, so 50 stable and 50 the other coin. So maybe you are on PancakeSwap, you want to provide liquidity in on the DeFi protocol. So maybe you have like 10 BNB, that is like 258 times 10, $2,500. So you have to have like 2500 USDT or BUSD, because BUSD works well with PancakeSwap. Oh, about BUSD, I'll talk about BUSD in a short while. So you can just provide lending there. Then borrowing, you can borrow on the DeFi protocols like SushiSwap or PancakeSwap. Maybe you do not want, let me use the best example. So you have gone to the DeFi protocol, you want to borrow $5,000. Now let's take two examples. Maybe Steven and Lynette. So Steven didn't know about stablecoins and stuff. So Steven borrows $5,000 of ETH. $5,000 of ETH. Let me say 3 ETH. He borrows 3 ETH to use for some other business. So because you borrowed 3 ETH, you have to return the 3 ETH. Now, Lynette attended this class and she knows about stables. So Lynette just borrowed the $5,000 of stables. So now during returning, maybe there is a mini bull run and now ETH is trading at $2,000. So Steven has to return the 3 ETH. So you remember 3 ETH times $2,000, he'll return $6,000. However, Lynette knew about stables, so she'll just return the $5,000. Now, because she had this prior knowledge, she hasn't paid too much for the ignorance. So you can imagine, stables are really fundamental in DeFi. Then, yeah, we talked about hedging and even hedging, and then I think this is one of the biggest use cases also of stables. If you're a trader, crypto trader, maybe you trade crypto pairs, you will hedge with the crypto pairs. Maybe you use the stable coin as the base pair. I'm sure you know what base means, the one that is usually the first one, USDT stroke BTC. Maybe a trader here is understanding what I'm saying. So traders use stables a lot during crypto trading and stuff like that. Now those are just some of the use cases of stable coins, and they're kind of tied to advantages that we talked about. Yay. Let's go to risks. Everything always has to have a risk. So before we talk about, I think my number one risk, I'll talk about it first of all. Remember again, just on the previous example of Lynette and Steven, Lynette borrowed 5,000 USD, Steven borrowed 3 ETH. Now, Steven returns 3 ETH the moment there is a bear market. Bear market means, we all know bear, like the prices are plummeting. So maybe he borrowed 3 ETH at 5K, but now on return date, the 3 ETH are worth probably $3,400. So you can see how risky it is for the DeFi platform that is offering that service of borrowing and lending. However, it's advantageous to Steven. So that's one of the risks. The volatility. Now the reverse of volatility. Again, let's use an example again of hedging against volatility. So yes, I'm happy. 2017, I've known about Bitcoin. I have 100 Bitcoin valued at $4,000, and then it plummets to $3,500. Now I'm scared. I turn my 100 BTC to 3500 times 100, wow, $350,000. Yes, at 2017. Fast forward 2021, BTC is at 69k. So imagine I would have owned probably 69 million. 69k, 6.9 million. Yes. No, we were using 100 Bitcoin. Yeah, 6.9 million USD. So I missed $6.3 million in profits because of hedging against volatility in just 4 years. No one will ever pay you that amount in 4 years. So that's a risk that we face. Yeah, like even me, there's a day, I think I watched some news by bad luck. I was holding some BTC, and then I was scared, so I converted them to stables. Right now, I think I missed some profits, probably in hundreds of dollars. I think they're not much, but I mean $300 is if I had not converted to stables, because I converted when it was at 28k. Right now it's at 37k, and there were small amount, so I missed that profit. That's a challenge on stables. Yeah, and now on regulations and stuff, centralized stables, they're facing concerns regarding transparency, audits, and all this stuff. So that's why I wanted to talk about BUSD. If most of you have seen Paxos is also another minter. So minting is just bringing, is like I don't know how to explain, but bringing something on the blockchain. So Paxos mints BUSD, but they halted the minting. Why? Because there are so many regulations regarding BUSD and stuff. So now BUSD will be replaced by a fast dollar digital USD, FDUSD, something like that. Binance will stop issuing it, I think, December this year. So probably if you have some BUSD, set an alarm after Christmas, after sherehe, you turn it to FDUSD or Bitcoin or whatever. So stables are facing so much challenges in regulations. Even AML is just anti-money laundering compliance, because some people, there's so many bad actors in crypto. They use stables to money launder. Then KYC, I'm sure most of you know what KYC, know your customer. If you have an account with these central exchanges, you upload your DL or passport or what is it called, ID. Yes. So there are so many regulatory challenges with most of these stables. Then when we are talking about types of stables, like the ones that are collateralized with crypto, algorithmic, the other one, what did we say, fiat. Yes, fiat. So let's take an example of Kenya. Maybe your stable was collateralized with Kenya. Now imagine how fast Kenyan stable is plummeting. So your stable will also plummet. That's a counterparty risk using collateralization. Then maybe it was, I gave an example of DYOR. Maybe we have minted USDD, and then for some reason DYOR closes down with your stables and the collateralized bitcoins. So suddenly when you try to trade with USDD, no one wants them anymore, and then they plummet. So those are counterparty risks. Then smart contract vulnerabilities, like people who took advantage of the Luna crash when the stable was crashing. those are some of the risks and challenges with stables. So let me, those of us who are not probably part of the communities, I'm gonna share in the what in the description. I've forgotten the name of that thing, so you can join the groups. We can learn. Remember, crypto is crypto and Bitcoin is important. If you are on X, on Discord, on just communities, because crypto is decentralized. So by decentralized, it means mostly the communities are the ones that uh, that control it. So I'm sharing also the X link. If you don't have, oh, you can also follow me or just download it anyways. Yeah, so those are some of the risks and challenges. So probably we can look at some of the outlook of stables. If you have additions, you can chat or you can request to unmute by using the emoji so that you can probably contribute. But yeah, the future outlooks, just from what we have been talking about, stables are likely to play super important role in mainstream adoption of crypto, because now it offers many gateways on how to exit the market, because you can convert your crypto to stables for to run away from volatility. You can use it for DeFi activities that we were talking about. There's so many things that we can do it. Also, we can embrace stables and use it to hedge against stuff like inflation and stuff using innovations. Also, stuff like algorithmic stables, there needs to be innovations to improve them. Then I think this one is super important: interoperability between the different stables and blockchain networks. If you are here in a very first sesh, when I started with blockchain networks and crypto, there's no way you can send USDT to a USDC wallet or USDC on the Tron blockchain to USDC on the ETH blockchain. But uh, there are bridges, there are stuff like that there needs to be innovations in so that we can make use of them. Now remember, bridges are pretty risky, because what happens in a bridge, if I want to bridge probably 10 USDT from Tron to BNB, I send it to the bridge locks it somewhere and mints USDC ETH, and then it's when it will release it to me. So during that process, if the bridge is not safe, someone can take advantage and steal both our coins, for the bridge and for the customer. But those are future outlooks on how to. There's a very important, I don't know whether to call it important, interesting podcast I did about USDC. I'll drop the link in the groups. Perhaps if you have time, you can listen to it. I think they're doing something on interoperability of stables. I also forgot to mention we do a lot of podcasts with experts in blockchain. You can just drop in when you're doing something. You can just listen. Podcast, you can listen when you're doing your own stuff. You can listen and learn a lot. And also in the groups, if you have important information, you can always share with us. So those are the future outlooks of of stables. I can't seem to find the Discord link. I found it. Now for Discord, you just press there's an emoji where you just press once and then you will be invited. I forgot how to remove it because sometimes the people complain that they can't join. Yeah, does anyone have an issue? I guess no, I'm not good at calculus anymore. I'm good when money is involved. What is he asking? What about wrapped Bitcoin? Just a brief summary. Okay. Yes. So wrapped Bitcoin, it's almost like what I was explaining about the bridge. So for example, though I'll look into it and give you like the, let me say, the scientific explanation behind it. So if I have Bitcoin on Bitcoin network, 10 Bitcoin, and I want to send it on Ethereum blockchain. So what I'll do, I'll wrap this Bitcoin. What by by wrapping it, what happens? You send it to an address, and then the Ethereum will mint a token called WBTC ETH. So the WBTC ETH is locked. I mean the value of your 10 Bitcoin is locked, and then you are issued with the tokens, the wrapped BTC in the ETH ecosystem. So you can use it however you please because the value is locked somewhere. I think I'm making a bit of sense, but I'll look into a better explanation of how the mechanism works. But that's just how wrapping takes place. For example, uh, if you wanna wrap, I've seen wrapped Bitcoin, wrapped. Mostly, it's usually wrapped Bitcoin most of the time because Bitcoin is not easily scalable. So that's why they wrap it, and then you can now use it in on ETH. Oh, there's also wrapped Bitcoin on BNB. So that's what happens on those WBTC that you usually see around. Yeah, I guess that's all for tonight's sesh on stables. Stables is pretty interesting. I gave you an assignment to go and listen to uh, a podcast show on crypto lingo. We called it crypto lingo, like the terms. Even I don't think we talked about wrapped, but yeah, we talked about NFA, DYOR, so many things. It's pretty interesting. Then there's also a podcast we did on stables. There's something USDC is doing. Did I think it was a Sunday weekly roundup, and you people should show up for the Sunday Twitter space, X space. My God, Elon. Yes, X space. On Sundays we usually have every Sunday a session on X that we discuss what has been happening on the crypto world for the whole week, and then um, I think I'll start recording it, and then I also post it on the podcast, so that probably if on Sunday you are praying the whole day, you can listen to it on Monday morning from church. Right. So if there's no other questions or suggestions, I guess we can end the call. I'll I'll try uploading this for the people who did not make it. So yeah, thank you so much for showing up. See you in the next one. I think the next session, Wednesdays is a must. So Wednesdays we will always have a class, but during the week, if I find space, we can also fix classes. I wish people were available on Fridays, but it seems people have fun on Fridays. So Wednesdays is a must. Oh, okay, you can unmute and ask your question before we to end the session. Someone raised their hand.
I'm sorry, I don't have a question. It was a mistake. Thank you.
It's okay. Yeah, I'll provide the links to the pods in the groups and here for those who are not in the groups. Okay, let me end the recording and then now we can leave at our own time.